Well, good morning, everyone, and cheers to cameras over here. Cheers to hopefully some type of resolution to this chop today. Retail trading team, this is your routine briefing. So I've had a few technical issues this morning. Excuse me again. So I am kind of late getting here. My uh, extra screen that I have broke down, so I am improvising accordingly. And again, that's why I'm a little tardy. So hopefully we'll get through that and go from there. Um, you can see I have a trade going here right now. This is not Barb by the book because after yesterday, I am going to take Barb. This is a variation of Barb, but the pure Barb back into simulation a little bit just so I can get a few wins in. Um, it's not like a crazy horrible drawdown in terms of P&L. Yeah, it's just not nice to lose every day, and frankly, um, I'm getting a little doubtful. I know the math is uh, still sound, yet if I'm being honest, I am an emotional creature and I need a couple wins. So I'm doing a variation of Barb today. Pretty much the same thing, except I'm not necessarily going to as many entries. So if you notice that, that's what's going on here. It's still a viable strategy. So if you're a little uh, more accepting of consistent losses than I am, at least for now, I encourage you to go to that document. I'm going to switch screens here. So I'm going to bring my little OBS screen over here so you can see that's how the magic happens. And I'm going to switch to this monitor, and that's going to be kind of our home base. And yeah, like I said, so I just kind of want to harp on that a little bit because it's not like strategy isn't working. It's just a kind of a thing that I think happens with a lot of traders, and I'm not immune to it myself. You go through a particularly significant drawdown, and let's take a look at it. Let's just kind of discuss this. I think it's a good little psychological experiment. I'll be watching for any ad on another screen. So if we go to the Barb data, okay, so let's start with a RBAF because that's the results-based assumption forecast. Still looks pretty nice. I mean, you still assuming about 10 trades per day, about every 2 months. Hypothetically, one doubles the account. Yet the thing is, what that doesn't take into account, especially in the beginning here, because even I took it live in March. Um, Again, looks real nice up here. Great P&L. Win rate's not great, but it works in the RBAF. But what's been happening here is, and you can see it here, are the just the lengths. That was obviously a good day, but for most of March, that was another good day. Most of March just spent a lot of these losing. This was a good day, losing. This day, every single trade was a loser. This day was flat. Yesterday, loser, and so I just kind of want to um, get through this drawdown, and then I'm going to go back and look at the data. I want this number to be 1,000. I know if you combine these occurrences that weren't broken down, it's probably there. But again, I want that to be 1,000. And yeah, so just kind of being transparent. I am a little snake bit, I believe is the term, because if you look at March, if I just take out everything but March, you can see March is negative $5,000. I do this full time, and I don't like having red months to say the least. And I know it's only halfway through the month, so it was probably going to happen. We'll have those really nice trendy days, proof of concept, blah blah blah. I'm totally cool to miss that. I want to get a couple wins under my belt. So once again, just wanted to go with a transparency there. If in case you're watching me trade live and you're like, why aren't you doing the exact mechanics? Well, that's why. So let's talk about the fun stuff and the stuff that's relevant to everybody else's trading. This is the warm-up document. It's available in the description of this video. You can also find the link to the Barb day trading log there, and it's a beautiful thing. Everything's in the description of this video, so I'm going to go ahead and update this because I did complete this today. So we're going to say that this is correct as of the 16th. I'm looking at a resistance here. So if you stand by for a sec, I want to see how we react here. Probably going to get another ad going if it holds. So this is one of those important levels. Like I said, I want to see what happens there. So I'm just keeping an eye on that on the corner of my eye in case we really start to break out, because then we'll start throwing on some of these contracts. So what happened last night? Down and balanced. You saw the characteristic two traps right at the open. You saw the first was a nice bull trap, and then you had the bear trap. And now it seems that the bulls are trying to break out. I think, and we'll see as we look at everything else. I do think that the sentiment favors bulls, especially if we start to see the volatility really start to come in. Right now, as I look, it's actually falling quite dramatically, and so that bodes well for the uh, the bulls so far today. So we're seeing that big breakout candle. Like I said, I'm probably going to add if we get that pop back down to 40, and yeah, we'll go from there. So Um, otherwise, on this warm up, open test drive, this was kind of that first sign of that bullish sentiment, at least intraday here, where you had that bullish open. We really briefly popped back down there and made an attempt to um, make sure I'm streaming because I'm not seeing it on this platform. Stand by. Okay, well, I guess we are streaming. I don't understand what's going on technology-wise. Um, Anyway, staying on track if we can. Uh, you had that bullish open test drive, and that was the first, I think, major indication that we might see the continuation of this bull move today. And we'll be watching our major levels, which we'll go over in just a sec. Again, normal variation profile, you're already seeing that breakout. You had that 25-point IBR, and if you look at just the ES, since that IBR was put in, we've made that nice big move to the upside, and it's kind of confirming that normal variation assumption. Yesterday's normal variation, we had the same TPO. If you look back, and it was very interesting because you had that continuation eventually as the day progressed, yet you didn't have the tremendous extension that you usually see with these, and so I just found that to be interesting. But today it's kind of behaving itself as we would expect with that since I started the briefing, really, we've moved almost 50 points, so quite the move, and quite good for Barb, ironically, if I had been playing it normally. But again, um, you cannot look to the past, you can only look to the future, and I just frankly need a couple winning days to get my confidence back, and we'll keep the log going. But yeah, I keep harping on it because I'm a very mechanical trader, and I just want to make sure that everybody understands, because I'm live here a lot, that if you see my mechanics deviating from the mechanics on that sheet, that is simply just to add a little bit more of a conservative element. Um, and I'll keep tracking the log as a control, which is the control of the simulation as a control shows. So yeah, that's enough about that. So moving forward and just looking at our expected move today. So we're obviously already outside it. The top of that expected move is about 911. So we'll see if we hold here. I do think if you start to see some continuation beyond that expected move, it's going to lend to a retest of that 3970 area, which we're going to talk about in just a sec. And one second, I don't know why my levels didn't print, so stand by. I'm going to make sure these lock in. There we go. Okay, and you can see the levels on this chart as well right here. These are my primary levels, what I'm looking at today. And then you have your N and 0.5 N calculations as well. So again, warm-up documents here. The read first explains everything. And that should be, wait, do I even have a read first anymore? What the heck happened there? That's weird. Yeah, I will have to go back and edit that as well. Trying to figure out why my comments aren't showing up here. That's really strange. Give me a sec. Refresh this page. Weird. Okay, well, I'm gonna have to fix that once we finish the briefing here. Um, and we'll go from there. So not to get too sidetracked, let's pop into the price action itself. Boy, So let's just start with actually the macro chart. And what's going on in macro land, you can see we're now above that trend line again. We kind of wicked it, found support on that primary VWAP, and here we are. So, like I said, now we're kind of targeting, I think, the underside of that other trend line where we've gotten rejected a few times and where the supply really begins. Um, and I think this shows up the best in our friend the TPO, which you can see we're kind of starting to build that double distribution look as the day progresses, as we've moved through that 50 single and into this primary, uh, what I think is the primary supply zone before finally popping and looking above. So I think once we take out this island value area here, that's when we really are going to start to move, and especially as VIX continues to sell off. So I'm going to keep it pretty short today. I'm a little disturbed about all my comments disappearing on the sheet, so I want to definitely get to that. Um, like I said, just kind of be watching that 70 zone. It's really a pretty big zone from about 65 to 80, we'll even say. This doesn't include on the TPO here, it doesn't include this prior day here. So I just have this highlighted as the island value area. I think that's a good starting point, but really it's important to see what happens if we do pop above 80, because that could also be the final supply area. And then once we're above the trend line again, I think you see the extension of that bull move. So cyclical bear market remains the call, at least for now, especially as we've bounced. Yet if we start to see any significant sell-off, anything can change. You've been seeing just a lot of change in sentiment overnight, and I think that this relief rally, we'll say, was caused just by Bill Ackman running his mouth. That's usually how these things go. And yeah, so we'll watch what happens here. We'll watch our major levels. I think everything's pretty clear. And besides that, I'm going to go to Twitch after I figure out, well, I'll go straight to Twitch to go live here, and I'm going to figure out what the heck's going on with my missing comments on that document. Like that document, everything else, you can find the links in the description of this video, and you can tweet at Routine Trader with your thoughts, and I will engage with you there. And finally, subscribers can respond to any newsletter. I'm going to pop that newsletter in before I go and fix the common issue on my warm-up, so that'll be in your inbox sooner rather than later. And if you're not a subscriber, please feel free to subscribe. I appreciate any support that you'll give me. And speaking of support, if you did enjoy today's content, please give it a like, as that helps with YouTube's algorithm. So that's all I have for you. It's time to trade. As you can see, we're breaking out. I dare say we might even be trending. We'll see if it holds. And thank you for watching, and stay classy until we talk again.